Welcome to Absorption and Variable Costing Part 1. This ACLET is actually a continuation of Cost Volume Profit Analysis Part 1. By the end of this ACLET, you should be able to calculate cost per unit of product using both absorption and variable costing. First, some context. The ACLET CVP Analysis Part 1 compared basic income statements using two different ways to organize costs. The traditional income statement organized costs based on type, manufacturing or non-manufacturing, while the contribution margin income statement organized the costs based on behavior, variable or fixed. The basic contribution margin income statement was useful for focusing on the relationships among the pieces we use in CVP analysis. But now we'll look at more formal, more complete versions of both the traditional and contribution margin income statements. We'll start by using the official names for the two income statements. The traditional income statement is actually the absorption income statement, and the contribution margin income statement is actually the variable income statement. The basic versions of both statements will still be useful. We can use them as big picture roadmaps so we don't get lost in the details. Because we will need the information when we prepare the formal income statements, we'll start by calculating the cost per unit of product using the absorption and variable approaches. Keep in mind that absorption focuses on cost type, while variable focuses on cost behavior. We'll use Jenga Inc. as our example. Here's the data. You can pause the ACLET and read through the list. Make sure to pay attention to the last bullet point. We will assume that beginning inventory is 0. This assumption will save you a lot of work. We'll use the absorption costing approach first. Which of the data points provided are relevant to our cost per unit based on cost type? Since we're focused on cost type, we need all of the manufacturing costs. Direct materials per unit, $102. Direct labor per unit, $88. Variable manufacturing overhead per unit, $64. Fixed manufacturing overhead, $810,000. Since we need to know the cost per unit, we'll need to do some math to get fixed manufacturing overhead per unit. $810,000 divided by 42,000 units produced is $19 per unit. Our total cost per unit using absorption costing is $273. Using absorption costing, each unit that we produced cost us $273. Now let's calculate our cost per unit using variable costing. This time, when you look through the data provided, you're focusing first on cost behavior, looking for variable costs. Then, from the variable costs, we grab any that are also manufacturing costs. We want only costs that are both variable and manufacturing. We find 3 costs that meet both criteria. Direct materials, $102 per unit. Direct labor, $88 per unit. Variable manufacturing overhead, $64 per unit. Our total cost per unit using variable costing is $254. Make a note of both absorption cost per unit, $273, and the variable cost per unit, $254. You'll need these when you prepare the absorption and variable income statements. This concludes the ACLET, Absorption and Variable Costing, Part 1.